In this recording, we're going to briefly talk about accounting for a retailer and a couple of the special issues dealing with that. And then also we'll talk about how to get started on your accounting information systems case. Accounting for a retailer. Well, to get started, we can see that the income statement looks a lot different than for a service entity. There's going to be multiple steps to a retail income statement, or a company that sells a product. To begin with, we have our net sales, and then we're going to subtract the cost of the merchandise or the goods that were sold to arrive at our first profit number, gross profit. So gross profit is meaningful because that's the profit or the income just off of selling our merchandise. Next, we subtract all the expenses involved in selling the goods. So rent, insurance, advertising, wages, salaries, depreciation, utilities, all the normal costs involved in operating a business are going to go here. So then we take our gross profit, subtract those normal operating expenses, and here's our next meaningful income number, operating income. So that's our income just from our core operations from our retail store, if we have a store. Then we have items that are non-operating. They aren't core activities. So if we have a revenue that's not core, isn't from selling our merchandise, then it's going to go down here. So something like interest revenue. So that would be if we have certificates of deposit at a bank, that's the revenue earned on those CDs. Or if we've borrowed money, the interest expense that we've incurred on borrowing money. And the last two are gains and losses from selling property, plant, and equipment. So again, notice it's a sale, but it's not up here recorded as sales because it's not selling the merchandise. Net sales represent selling our goods. These sales down here aren't things that are from sales of things that we don't normally hold out for sale. So, if we have a delivery truck, we're not normally selling that delivery truck. We're using it normally in operations. So if we actually dispose of it, eventually the gain or loss from that goes here. All right, then we arrive at income before taxes, or income taxes, not all taxes, just income taxes. And then income tax expense is usually some sort of percentage or based off of income before taxes, and then we arrive at net income. So we can see there are multiple income reported, different incomes reported on the income statement. The next thing I want to focus on is the merchandise inventory account, which is an asset, goes up with debits, down with credits. So it goes up with debits, down with credits. Well, it's going to go up when we buy goods. So basically it's going to go up for purchases of merchandise. So whatever that merchandise cost, we're going to put that into the inventory account. Then when we sell the goods, again, we want to take cost out, right? So if we sell the goods, we want to remove the cost of the goods that were sold. So we're going to take out cost of goods sold, which becomes an expense then. That we're going to, take cost out of an asset and move it to an expense account. So again, let's just review. Costs go in when we buy goods, and costs will go out when we sell them. Let's look at this, what the journal entry would be for the purchase. So when we purchase goods, we debit inventory for whatever dollar amount. So the asset will go up, and either we're buying on account, so accounts payable will go up, or maybe we pay cash right away and that asset will go down. Second entry was for cost of goods sold, but actually that happens at the same time we sell the goods. So when we sell the goods, there's actually two accounting events, the sales revenue and the cost of goods sold expense. So let's look at the journal entry for that. So let's assume that we sell 2 sweaters for $150. And let's say those cost us $50. Oh, didn't get that dollar sign in there. Okay, so we sell 2 sweaters for $150, and those cost us $150. Dollar sign looks kind of weird. Okay, well, it's really two transactions. One is the sale. So assuming we sell on account, accounts receivable will go up $150, and we record our sales revenue, $150. The second part, though, is the cost. we want to recognize the expense, cost of goods sold, and I'm just abbreviating for CGS for cost of goods sold. So debit cost of goods sold for the 50. And then we need to take it out of the inventory account. So just like we did in our T account, credit inventory. So, after that transaction, we have sales of 150 and cost of goods sold of 50. So, if we, it'd be 150 here, 50 here, and our gross profit just off of that sale was $100. So 150 minus 50, $100. Okay. Let's see if I can get out of here and move on. Next thing I want to talk about is your accounting information systems case. And you can see this is filed in doc sharing. You'll need to print out the whole thing in order to do it. Part of this case you'll complete it manually, but the second half of the case you're going to complete it using Excel. And it's a great little case because it's going to give you the opportunity to work through the whole accounting cycle, without hundreds of transactions. So it gives you the opportunity to see the whole accounting cycle. It's for the month of August, so we have transactions here listed. Here's our requirements. It wants us to prepare journal entries and then post those to the ledger. I'm going to do the first one for you just so you can see what it's going to look like. So the first transaction, the owners invest cash in exchange for 5,000 shares of common stock. So we can see, cash is going to come in, right? And then on the other side of the accounting equation, we issue common stock. It's 5,000 shares, but when I convert that to dollars, it's $45,000 worth of common stock. So let's go to our journal and post this. Go to our journal and record this. Okay, so our first transaction was on August 1. Cash came in. I always like to put an arrow, but you really, in real life, wouldn't put an arrow there. I just like it for teaching purposes. So we have a debit of 45,000, and then we indent. Remember, we indent our credits. So we're going to credit common stock, and that'll increase stockholders' equity. So we're increasing assets, increase assets with cash, increase stockholders' equity with common stock. So we have our debit and credit. Step 2 wants us to post this. So let's take our debit to cash and post that to the, I see I didn't get something erased. Let me quickly erase this, so that you can't see, and I'll do this all over again. Didn't realize I had done that. All right, here we go. So we're going to post on August 1. We had a debit of $45,000. And so I need to also fill out the balance. So here's the transaction, either a debit or a credit. And then I put the balance. That was a deposit of $45,000 to our bank account. And now we have $45,000 in our, assuming this is a checking account. Now if there's another transaction, let's say a credit for 100, then our balance went from 45,000 minus 100, it would go down to what? 44,900. So you just keep an ongoing balance. Okay, I'm going to erase this last part. So, let me put that $45,000 back in there for the balance. Okay, the other thing is I need to go back to the journal and post, reference this account number 110. So let's go back to the journal. Oh, went too far. There we go. Go to the journal, and in the post-referencing column, I put 110. So that tells me I have posted $45,000 debit to account 110. We can go quickly do the one for common stock as well. We're going to go to the common stock account. So flip through your pages. And I see I didn't get this erased as well. My eraser here. All right, so let's start it from the very beginning then. So also on August 1, this time we had a credit to the account. So we credited common stock 45,000. There was no balance, So that puts a balance of 45,000 in that account. Then we take the account number 310 and go back to the journal. Go back to the journal and we put, whoop, that's, yeah, and then we put the account number 310 in there. Okay, and then we're finished. And then you'll enter in more transactions. Okay, let's go back to the requirements. Really, that's going to be step 1 and 2, and then you're going to complete a trial balance. So you'll have an unadjusted trial balance. Step 3 are the adjusting entries. Now, I have given you, at the very tail end of this case, is this trial balance, and I'm sorry I couldn't get it in except sideways this way because it's horizontal. But anyhow, you can see over here, if you turn your head, all the assets, liabilities, stockholders' equity, income, there's revenue and expense accounts. The first 2 columns are for the unadjusted trial balance. So after you finish step 1 and 2, you're going to enter in your balances. And then you're going to solve for your adjusting entries, and then you're going to take your unadjusted balance, factor in the adjusting entries, and get the adjusted trial balance. And by the way, I have a second recording going to show you how to complete this worksheet. The other thing I want to say before I leave is that this worksheet is in doc sharing in an Excel document. So even though I've given you this in the case, that's just so you can see what it looks like. There's an actual Excel document, and you will complete it using Excel. When you use Excel, I want each of you will be responsible for doing your own work. Now, I want to encourage you to work together. Please talk about the case. The case is here for you to learn. It's not a test. It's not whether you can do it on your own, unassisted. In a work environment, we learn from doing things and we learn by asking others. So this is a project for you to learn. I want you to do it perfectly. If all possible, I'd like every one of you to complete this case accurately because you'll learn by doing it correctly. So feel free to ask questions. But if you ask questions, you still have to enter in the information yourself, particularly on the Excel spreadsheet. So make sure you're the one completing the Excel spreadsheet. Even though I've already set the working trial balance up for you, when you enter in your numbers, each of you should be doing that yourself. You may, here at the bottom, you're going to have to total, so you got to add up, you're going to have to put a formula in. It's fine if you talk with each other and problem solve how to arrive at that formula, but at the end of the day, each of you should type in your own formula. Do not work with somebody else and one of you do all the, entering in the data, and then you save it and copy it to another student. Don't copy it over, because if you copy it over, I'm going to think you copied and are cheating. So make sure you enter in your own data, even though you're welcome to work with each other. Okay, that's getting you started on the case, and we're all done.